just see if there's any particular questions. I've got an access to the questions down the side here. I'm not sure if there's any that are. There are. So there's a question there. Do ETFs allow for reinvestments? ETFs do. Typically, we don't reinvest directly into that ETF through our portfolio administration service because we have a number of investors who take income out. And also we want to sometimes rebalance. When you want to rebalance your portfolio every quarter, we tend to collect the money and rebalance once a quarter. Now, the benefit of that, it lowers your transaction costs, sort of minimizes anything that may be, it makes sure that you're investing with a reasonable amount of money so that $4 contract note cost doesn't become excessive if you're only buying $200 worth of an ETF. But effectively, you are getting the best of investing at a low cost into the right assets. There's another question there. Do we have an issue sourcing fixed income ETFs? If you go on our website, you can look for and search for fixed income ETFs. There are categories there. We are in the process of updating our ETF report, which should come out in the next week or so. The 2024 report is on the website, but the 2025 one will be available very soon. And that ranks all the index funds that do fixed income. On there, gives them our 1 to 5 star ratings with the rationale as to which ones we think are the better ones, and it gives them the most recent performance numbers. So Lee, if you wait for that one to come out, you can see which ones that we're recommending.
Hey, Alastair, can you hear me now?
I can, Alan. Yes.
Hooray!
It's great to hear you.
That took a bit of effort. I don't know what happened there. Anyway, sorry about that. Not that I'm vital to it. You're the one conducting this webinar.
No. It's nice to have you there, Alan. It's your insightful questions.
Well, it's nice to be here. Okay.
So I've answered a couple of questions, and let me just go down and see if there's something else that was.
Where are we? Have you finished the webinar now?
Well, we're down to questions. Drop in the questions.
Okay, good. Right. Well, there's tons of questions. Tons of them. Look at them all.
Tons of questions there. There was one from Xian. Please advise what specific ETFs we've selected based on our criteria.
Okay,
Xian,
do that.
Just to answer that question, obviously, as I just mentioned, we've got this ETF report coming out. All the ETFs that we pick in our portfolios are 4 or 5 stars, right? So we don't usually pick anything else other than that. In the custom portfolios, it's 3 stars and above. You can pick any of those ETFs. We have a couple of criteria. Again, we've limited the list to ETFs that have more than 500 million. Now, ETFs are growing every day, so the ones we picked 3 months ago at the beginning of April are now probably the ones that were just below 500 are probably through that now, so there'll be another list. But we use those criteria which I started the presentation with. That's what we pick them on. And if you look at our website and you look at this report when it comes out, or even look at last year's report, you can see the ones that we've selected based on the criteria that we use and the weightings that we put on those particular issues.
Did you see the question from Joe Sands? He says, if I invest 500,000 and have 5 ETFs, what is the fee? Only admin at $99 or $99 for each ETF?
So 500,000
and 5 ETFs.
And 5 ETFs.
What's the admin?
Well, the admin fee is 11 basis points on the 550,000. I'm just going to try and work that out in my head, which will be about $500 per annum. And then there'll be a management fee, which would be capped at $880. So your total fee, Joe, would be about $1,300, 13 right. Something, including GST. Yeah.
Okay, that's good.
And then again, just to answer, to clarify for Joe, there'll be no brokerage on the buys. So you would buy those, you would spend $500,000 at nil brokerage. So there's probably quite a big saving there.
Yep. Zoe Brown says, do investors with InvestSMART have full legal ownership, or is their investment held under a custodian model?
Zoe, thanks for this question. You have full legal ownership. So we use a HIN model. So for those of you that don't quite understand how the ASX works, there's two ways you can hold shares in ETFs. One is under an SRN number, a share registered number. So that's where you own the shares in your own name with your address, but you've got a unique number. And then there's a holder identifier number, which is a CHESS-based thing. Again, securities are held in your name with your address and all your details, but that HIN number is linked to a broker. And we have a particular broker that you're linked to, but what that means is that we can give you very low cost brokerage to be able to buy and sell those securities. So you have full legal and beneficial ownership. Under a custodian model, you would have the beneficial ownership, but it would be held in the name of some nominee. So that's a significant difference between us and some other providers.
Nigel Rose has got a question that Mitchell Datson's answered, but maybe you'd like to answer it too. Nigel says there are ETFs in the custom list that are rated poorly by performance compared to their peers in the index on CommSec. Why are those on the list? IJR, for example, is in the bottom 20% by performance over the most timeframes.
Yeah. All right. Just to Nigel, it's a good question. We're looking at performance. Performance depends on what index that you're trying to buy into. Now, IGR is the Japanese index, which is probably underperformed because of currencies and various other issues that are going on within Japan. It's had recently quite good performance, but it's not. We're looking at it in terms of its fees, in terms of its index tracking ability, in terms of the size of the fund. So we think that one will perform against the index that it's trying to represent, which is the topics, as well as any other index, but probably with better fees and with a larger fund size. That's why we would have picked that one. But I'd be surprised, how many, there's not that many Japanese indices. And IGR there's probably only about 4 of them that track. And it depends which index you're trying to track. There's 2 indices in Japan. And we tend to go with the larger index, which is the topics one, rather than the Nikkei.
Clive says, why don't you invest in investment trusts?
Investment trusts, there are a lot. We have looked at some private credit investment trusts. Now, the only issue that we have with investment trusts is there is no market maker. So you're buying and selling trusts, which are very much dependent on whether there's other buyers or sellers around in the market. And investment trusts tend to trade a bit like LICs, listed investment companies. So they can trade at discounts for quite a long time. So you can buy them, and you are usually buying assets at a discount, 5 to 10%. The problem with trusts is that discount can stay at 5 or 10% or get bigger. So you don't necessarily get the performance of the underlying assets. You get the performance of the trust as it trades on the market. And the difference being, if you buy an ETF, you get the performance of the index, because there's people creating units and canceling units all the time. So there's never an overhang of buyers or sellers. You're only buying the market at the market price. So that's why we've steered clear of listed investment companies and investment trusts.
Okay. A couple of people have picked you up on the IJR as US small caps or S&P 500.
Oh, I'm sorry. Sorry, I was looking at IJ. Sorry, I misread that one as IJP.
IJR. IJR
yes.
is US small caps.
Small caps, I beg your pardon. That was my fault. I was looking at it. I have to get my glasses cleaned, Ellen, I think.
Okay.
IJR. Let me take that one away. The IJR index. I'm trying to remember off the top of my head which US small cap index that comes back to, but rest assured, I will answer those questions as soon as this presentation is finished. I will do a little bit of research to find out just why that one has underperformed, because I'm not sure which small cap index that follows in the US.
Apparently the S&P 500 small caps, or S&P small caps anyway.
The S&P small caps. Yeah. I'm not quite sure why it would be underperforming any other or any other S&P, any other index ETF that was following the same index. It should be performing the same. It's usually an index difference. I mean, there is the Russell small cap index in the US, which would give you a slightly different outcome, obviously.
Nick says, how do you protect against a major market fall? Which I'm not sure you can really, but anyway, go on.
No, I've got to say, Alan, I was going to let you answer this one, but it's we can't. Now, I'd love to say we have the best crystal ball in the world, and I would probably, if I did have it, I would make it cleaner than my glasses so I could see what was happening. We don't have that. So if there's a major market fall, all we can do is say that a lot of our balanced and conservative and growth portfolios have a mix of defensive and growth assets. And, it's the old 60-40, 70-30 rule. As long as you don't have all of your eggs in one basket, you should be cushioned from a major market fall to some extent. Now, that said, during the GFC, everything fell in unison. If that happens again, all I can say is it will happen again. We just don't know when.
Yep. Archie says, by offering a targeted and specific list of ETFs that are star rated, does that mean we're more likely to do better than an investor in, say, Beta Shares Direct that can choose any ETF for their custom type account, custom type option? So really, I suppose he's asking for just a comment about the benefits of having a walled garden of chosen ETFs to choose for the custom ETF, I guess.
Look, I think, Archie, it sounds like you're obviously a more sophisticated investor. What we think we have a duty, an implied duty, to make sure that our clients don't get themselves into trouble by piling in or buying into the wrong thing. One of the reasons we haven't added Bitcoin so far is it's quite volatile, and we would want to make sure that people had a limit on how much Bitcoin or a Bitcoin ETF that you had in your portfolios. So we think we're trying to do the right thing by investors. I think, Archie, at some point, we will open up this platform to let you invest in anything. It's early days yet. As we've said, we'll add more ETFs as we go along. But we do have a belief that for most people, there should be guardrails of some sort to try and stop them saying, well, I'm cashing out all my money from my conservative portfolio and putting it into Bitcoin, because that's not necessarily in the best interests of the investor. And we don't think we wouldn't have done the right thing by the investor if we let them do that without some guidance or guardrails.
Louise wants to know, if we don't have an account with InvestSMART, are we able to access the star report for ETFs?
Louise, you can if you leave your email address or log into our website and get in touch with us. We will send you a copy as soon as it comes out.
There we are. Good for you. Andrew says, in industry super funds, they offer thematic and active style options. Have you ever investigated their performance?
We do get Andrew, we get a lot of data, which we spend a lot of time analysing on what other people have done and comparing ourselves. The industry funds don't provide as much data as some of the other public offer or other major public superannuation funds in terms of what their asset allocations are. To the extent we get it, we do look at what they hold. So we look at what all the major funds which have balanced active high growth options, what asset classes are they investing in and how much and how often do they switch them? Because that's probably quite important. Where is the money moving to is more important than where it's been. So we do. We are looking at doing different reports. It's an interesting topic, that, Andrew, and let me take that on board, because we should do a report on what major super funds do, and how do they manage superannuation money, and what can you do to try and replicate what they do at a low cost. We're of the belief that you can actually replicate what Australian Super does in their balanced growth and high growth options with about 5 or 6 ETFs. You can do exactly what they do at probably the same or less cost.
The questions are slowing up, but Joe says, comparing growth funds to VAS ETF, VAS has 8.79% total return and 4.48% income versus growth ETF. And why is choosing an ETF from InvestSMART better than that? And the VAS has 0.07% fees.
0.0%,
yeah. Why is choosing? So look, I mean, there's an opportunity for you to pitch the InvestSMART difference. Come on.
No, I do. Well, obviously, Joe, you can buy individual ETFs and you get a tax report. What we think we offer is we've got a number of other tools and things that you can use. We have health checks that you can add. You can add your portfolio to our system, and we'll tell you whether you've got enough assets in the particular asset classes that you want. You can, if you think you're a growth-based investor, have you got 70% of your assets in growth and 30% in defensive assets. So we give you all those free tools when you come on and use our services. Vanguard is a great service. They're a great provider and an excellent issuer of ETFs, and we use a lot of their products. We think that if you come to InvestSMART, we can give you a lot more help with making investment decisions. We're agnostic to any ETFs. If BetaShares, if you go on the BetaShares direct platform, they tend to push the BetaShares ETFs at them, which is what you'd expect. If you use Vanguard, Vanguard tends to offer you what Vanguard offers you and no one else's. We will look at everyone. We're issuer agnostic, as I said. So yeah, you may suffer some small performance because you're paying us a fee for that, but we think we can add value in other ways.
There you go. We seem to have run out of questions, Alastair.
Hopefully I've answered them all right, or maybe nobody likes the answers.
No, it's good. I think you've been comprehensive.
It's quite comprehensive, right?
Yep. So I guess that's it then.
Yeah, well, I think this is recorded, so I think just to say that we will be sending this out to everyone who attended today, and there'll be a copy available tomorrow, I think, according to Mitch. So
on the website?
On the website, yeah.
Yeah, okay. So yes, Joanne, it is recorded, and there'll be a replay of it for whenever you like. Joanne says, it's brilliant. Thank you very much.
Yep, that's great. Okay, thanks, Alan. Thanks for hosting that. I'm sorry
thanks everyone
you went silent for a bit, but it's nice to have you back.
No, it's good to be back, and thanks everyone for participating in today's webinar. It's been great to have you, and I hope you learned. If there's any questions you have, please feel free to call up the customer helpline at InvestSMART, or email them, and we'll be fine to answer your questions. So see you later.
That's great. Thanks, Alan.